Hi there, it's Deanna. I just wanted to bring you some really important information. Since the Feds cut rates 50 basis points back on September the 18th, we've seen 30-year mortgage rates rise meaningfully. And you may be wondering why this could be. The Fed is reducing the Fed funds rate, which is not mortgage rates or even a long-term rate. The Fed funds rate is a very short-term rate, literally a rate that's only good overnight. Banks use this rate that they can lend money to one another, but it is the building block for all interest rates. When the Fed changes the Fed funds rate, it almost immediately impacts things like money market accounts, credit cards, car loans, and home equity lines of credit, etc. But long-term rates like mortgage rates are impacted more indirectly. An example of this happens as the Fed cuts rates and investors' returns on money market funds decrease. If it's anticipated Fed will continue to lower rates, which in turn will continue to reduce the money on the money markets, the investors may want to preserve their returns by selling their money markets and buying longer term duration bonds like a 10-year treasury. As more of the 10-year treasuries are purchased, their prices tend to improve, which in turn lowers the yield. Mortgage rates typically follow the direction of the 10-year treasuries. Recently, in anticipation of well-telegraphed rate cut, the 10-year treasury and mortgage rates had declined significantly. Therefore, the financial markets had already priced in the cut by the treasuries in advance of the Fed announcement. And after the Feds cut the rates, a surprisingly strong jobs report and more stubborn inflation data were released. This created a spike in higher mortgage rates. It's quite possible that the Fed will continue to reduce the Fed funds rate and eventually will filter into mortgage rates. If you have any questions on where the market may be trending or where it may be headed, please don't hesitate to reach out. I'm happy to help. Thank you so much. We'll talk to you soon.